Right, Assalamualaikum and good afternoon, everyone. So for today, first we're going to continue our lecture and also our discussion related to Proforma statements. Yeah, share with you what we've done so far based on last week's discussion. So this is the final part of topic of cash flow and financial planning. Yeah. So this is our final statement, which is called the Proforma statements. And based on this question last week, right, we're going to prepare Proforma statements or Proforma of statement of financial positions for this company. And so far, what we've done, okay, let me share with you what we've done so far. Here's this part. Okay, to the left is the question. Okay, and the right one is our ongoing answer. So this is not the final answer yet. So as a recap, we are trying to prepare Proforma statement of financial positions or Proforma balance sheets. We're going to increase or estimate our statement of financial positions inconsistent with the increments of the sales. Okay, so first things first, whenever we want to prepare a Proforma statement of financial positions, we're going to need the increment or the percentage of increment of sales. So for this question, the increment supposed to be 20% for the following year. Okay, 20% increase next year. So what we need to do with this 20%, okay, and if you recall, we're going to increase according to sections or according to categories. The first one is based on the current assets. Okay, last week we've increased the current assets by 20% each items. Therefore, this is the values after the increment from 53,000 cash to 63,600 the following year, and so on for all four items. Okay, all four items under current assets. So this part, we increase by 20%. Okay, no restrictions. All items under current assets, we will increase it according to the percent of sales increment. Okay, no issues or no restrictions lah. Okay, everything. Next, we're going to do for the fixed assets. So we have two fixed assets here. Okay, for this question, they specify the types of fixed assets. So therefore, the one that we want to increase only related to the operation of the business. Okay, so from the two, the one that relates with the operation of the business is net plant and equipment. Okay, and land is not related directly. Okay, so what we're going to do with the fixed assets, we are going to increase again by 20% only if we need to find these terms, whether they reach full capacity or not. Okay, so if it's reach full capacity like this question, we're going to increase this 80,000 by 20% as well. So that's why for net plant and equipment, we increase from 80,000 to 96,000 because it's already reached its full capacity. Now, sometimes they use the word operating at maximum capacity. Okay, they may use the word full or maximum. Okay, so if it's full or maximum, we increase. If it's not, then it remains the same. So this 80,000 will remain the same. Okay, for land, we're gonna remain it constant. Okay, we're gonna leave it constant because this is not operations assets. All right, but some other cases, the fixed asset is general, just like this one. For example, I'm going to use this example for statement of financial positions, where they use the word gross fixed asset or net fixed asset. So the fixed asset is general. So if this is the case, we are going to use the same rule as our net plant and equipment. Okay, so we are going to increase this fixed assets if, again, the rule is it has reached full capacity, okay, or else it will remain constant. So once we have all of these assets increased, okay, according to the rules, especially for the fixed asset, we're going to total up the values. So in this case, the total value is 407,200 ringgit. Okay, next we move on to the right-hand side. First, we are going to do the current liabilities. So the current liabilities, we have 3 here. The first 3 is our current liabilities. Okay, so the rule is for current liabilities, we are going to increase everything except notes payable. So notes payable will not be increased. It will remain constant. Okay, so the rest you will increase again by 20%. So that's why our account payable and tax payable increase by 20%, but notes payable remain constant, 35,000. Okay, and the rest of long-term liabilities and equity will remain the same. Okay, for example, bond 21,000 remain 21,000, preferred stocks 45,000, and common stocks 130,000. So that was the last item we put last week. Right, so we left with one more item, which is the retained earnings. Okay, retained earnings currently is 37,000. Okay, so for this retaining, this is special. Okay, I'm going to put a symbol plus there. Okay, why special? Because it will increase. Okay, it will increase. It will not be 37 anymore. It will increase, but it will not increase by 20% like the rest. Okay, so how to find the new retained earnings? We have to use formulas. Okay, so what kind of formula? So if you refer to the note, this one, we have this formula of retained earning. Okay, retained earning plus sales plus MPM plus 1 minus DPR. So RE0, which is the current retained earning. Okay, this is the current retained earning. S1 stands for sales for the next year. Okay, or forecasted sales. Okay, the label 0 and 1 represent, kalau 0 to now, if it's 1 means next year or forecasted value. Okay, so here it means current retained earning. S1 means forecasted sales or sales for next year. And then we have 2 ratios. Remember in our previous topics, we have financial ratios, right? So we have NPM, which is net profit margin. And we also have dividend payout ratio, DPR. So we need to get these 4 informations in order to get our new retained earnings. And this new retained earning, we will put it in our forecasted Proforma, okay, which is, it will be here, our new one. So therefore, to find new retained earning, okay, we need to have, I wrote back line. I'm going to write back the formula. It's RE0, which is the current retained earning. I'm going to plus, here we have a bracket here. Sales 1, which is current sales, oh sorry, not current, the forecasted sales, multiply with net profit margin, multiply with 1 minus DPR. Okay, so this is the formula. So technically, okay, the one in the bracket, okay, the one in the bracket technically is the formula to find the new retained earning. Remember, the concept of retained earning is accumulative. It is accumulate from one year to another. So technically, this whole formula is to use the original or the existing retained earning, and we're going to add with the new one. Okay, to add with the new one. So the one in the bracket here is actually the new retained earning, okay, which is for that particular year, retained earning for the year. Okay, the one that we want to calculate is the accumulated one, when we combine the two. Okay, so if you recall the concept of retained earning, okay, the concept of retained earning, it comes from net profit. Comes from the net profit. So when the company generate net profits, what they're going to do, they're going to pay dividend. I already told you this, I think, dividend. Okay, they're going to pay dividend to the shareholders. And the rest of the money, they will put it in the retained earning, RE. So basically, these first two parts, the new sales multiply with net profit margin, this is to find the net profit. Okay, if you recall our ratios from previous topic, net profit margin stands for net profit divided by sales. Okay, so if we know our net profit margin, the percentage, and we know our sales value based on the forecasted sales amount, if we multiply the two, okay, we can get the net profit of the year. So that's why these two parts of the first two items in the bracket is basically to find the net profits. So this part we want to find the net profit. Okay, so next part, we have 1 minus DPR. DPR stands for dividend payout ratio. So dividend payout ratio is basically the portion of dividend taken up from the net profits. Or in formula, it means DPR equals to dividend divided with net profit. Okay. Then we get the dividend payout ratio. So again, if I use this example, if I have a company have 100 million worth of net profit, and I decided to pay dividend amounting 30 million to my shareholders. So if I want to get the dividend payout ratio, simply take 30 divided by 100. So I have here a 30% dividend payout ratio. So out of 100 million, 30% I will pay dividend. So what happened to the retained earning? If I pay dividend 30%, automatically we know this is 70% or 70 million. So if you recall this formula, it's 1 minus DPR. So if I have 1 minus 30%, then I get this 70%. So that's why the second part is actually to find the RE, the retained earnings portion. So if I have this in percentage, multiply with the net profit that I got from our first parts, then we get the new retained earnings. Okay, so that's the whole idea. Okay, but if you don't get the idea, you have to recognize or memorize the formula in order to get the new retained earnings. So therefore, based on this formula, going to incorporate the information that we have so far. The old returning from the question was 37,000. And we're going to add with the new sales. Remember, the sales in 2017 was 500,000. And this company expected to increase the sales by 20% in 2018. Remember, the S1 is sales for 2018, the one that we are doing for our Proforma. So the original was 2017, the Proforma is 2018. So therefore, if it's increased from 500K by 20%, so you're going to increase it by 20%. So we have is 600,000 worth of sales for the year of 2018. Okay, so S1 is 600,000. So how I get this 600,000? 500,000 increased by 20%. So they increased by 100,000. So a total of 600,000. The net profit margin. Okay, so both net profit margin and DPR, there are two possible outcome of this. Okay, so first, the question might give you direct the net profit margin and also the dividend payout ratio. So if that's the case, what you need to do, just use that as our ratios. Or if it's not given in the question, the ratios, you might have to find your NPM and DPR yourself. So therefore, these two formulas is very important. Okay, if it's not given. Okay, but for this question, I think they give you straight away. The company paid out 2.5% of dividend. So this is the dividend payout ratio. And the net profit margin is 5%. So this is the NPM. So for this question, they give you straight away. Okay, but some questions, you may have to use the formula, these two formulas. Okay, so just keep these formulas handy just in case you need to calculate yourself the net profit margin and also the dividend payout ratio. And for this question, they already gave the net profit margin of 5%. Okay, this part. 25%. And you multiply with 1 minus DPR. So the dividend payout ratio is 2.5%. Okay, very small there. So multiply 30,000 with 1 minus 0.025. So plus with 37,000. So you're gonna have here an earning of 66,150. Okay, so this is our new retained earning. We're gonna put this 66,150 here. So similar like before, you're gonna include or you're gonna add every single items here. Okay, can you check with me or can you check for me? If you add everything here, will you get the same value as this one? Okay, because we know the total claims or the total of liabilities and equity should be 407, 200. Similar like our assets. So can you add all of this and confirm whether we get this 407, 200?
Dapat, Doktor.
Dapat?
Dapat.
Exactly 407, 200?
Yes.
Are you sure?
Good.
Ni you plus all of this. Sebab jawapan dia sepatutnya tak dapat.
Total claim tak dapat
Sorry?
407,200.
Berapa?
Total claim tak dapat 407,200.
So dapat berapa?
390,850.
850. So short kan? It's not exactly 3, 4 or 7, 200. So we are short by how many ni? If you compare the difference, they short by berapa ribu? 1,100,000 kan?
16,350.
16,350. So we are short by 16,350. So what we're going to do with this shortage, we're going to put it here.
We're going to borrow?
Yeah. So this amount, 16,350, is our balancing figure. Okay, because this is the amount that we short. We don't have an amount, we don't have this amount. In short lah, kita tak cukup this amount. So this amount is known as AFN. Okay, this is the amount that we need to borrow. AFN stands for additional funds needed. Okay, additional funds needed. So that's why this part, the AFN is the external sources. So if you remember last week, there are two sources, the internal and the external. Internal is the spontaneous, external is the non-spontaneous. Okay, so that's why if you see our so-called items, I go back to my answer here. The one that we increase, those are all spontaneous, all internal. Okay, those yang remain the same on the right ni, this is all non-spontaneous ataupun external. Items like notes payable, items like bond, preferred, and common stock, these are all external. So meaning if you want to increase the values, we need to get the money from outside. Okay, that's why nama dia external. So based on our estimation so far, our amount that we need to borrow outside is this much, 16,350. Okay, so that's the end, or that's the answer lah, basically. Yeah. So we need to find actually this amount. The one that we need to find is this one, 16,350. Okay, so when you calculate, ataupun when you add everything here, it shouldn't be the same as total asset. There will be a difference, and that difference is known as AFN. Okay, additional funds needed. So with that, now we balance, okay, both sides for our 7,200, and we got to know also the amount that we need to borrow from external parties, which is 16,350. So what I can conclude here, if the company wants to increase their sales by 20% next year, they need to increase 20% of their assets. Okay, some of them can be generated from inside, from internal, by extending the accounts payable, the tax payable. But this amount, 60,350, they need to raise from outside. They need to borrow from outside. Okay, and we have 4 different sources here. Either to use notes payable, they use bond, preferred, or even common stocks. They need to decide. Okay, but for this question, they don't ask you to decide, right? Okay, they don't say anything. So this would be our final answer. Okay, so the whole answer ataupun the whole statement here will represent our our total answer together with the AFM. Okay, so you need to show your calculation of new retained earnings like this. Okay, and if possible, show also the calculation of AFN. So AFN, it's based on 407,200 minus with 390,850 to get 16,350. Okay, show these two figures and put it inside our statements. Okay, so that's our statement of financial position ataupun pro forma of statement financial position. Okay, there's a twist for the question. Untuk soalan ni tak ada, but for other types of questions, they may include additional information. Okay, so for this question, let's say I extend. Okay, I extend the information. Okay, I may add. Okay. Any external funding will be absorbed by, okay, I put a line here. Line here represent anything yang kita tak include tadi. It can be notes payable, like I said. It can be tax payable. It can be bond. Sorry, tax payable. Okay. It can be bond. It can be preferred, or it can be common stocks. Okay, I give you one example. I tambah satu ayat je lagi. Okay, after this whole construct, dia kata any external funding required will be absorbed by notes payable. Let's say I said notes payable. So what does it impact to our statements? Okay, our statements will change a little bit. Okay, generally it will be something like this. Okay, but we need to change something because the questions, specify directly that the external fundings will be absorbed by notes payable, for example. So what happened? Our amount required is amount. Instead of we put AFN here, okay, we're gonna increase our notes payable here. By how much? By this amount. So this amount will be absorbed by notes payable. And what happened? This will not exist. Okay, you're gonna add 16,350 here. So for example, I delete ni. So 35,000 plus 16,354. So we're gonna have 51,350. And we're gonna get our final statement looks like this. Okay, the total is still the same. The only main difference would be this AFN will be transferred to respective sources, okay, according to questions. Okay, I gave an example just now. Sorry. This one. I give example if any external funding will be absorbed by notes payable. So therefore, we're going to increase notes payable by the AFN values. Okay, like this lah. Okay, it can be bond as well. So kalau bond will be absorbed by bond, for example. So you're going to transfer this amount to bond. Okay, so tengok soalan lah. It depends on the question. So, but for this question, it doesn't specify, kan? So if it's not specified, that's why our final answer still look like this lah. Okay, kalau tak ada specification of AFN, so we're going to create one line for AFN and these values to get the total claims of 407,200. Okay, any questions? So that's
Yes, doctor.
yeah.
Doctor, you said that you said just now any external
Funding.
funding.
Hmm.
Okay, what if dia dah berkata yang external funding tu ialah let's say notes payable bond. So like ada more than one external
Sources.
funding. Yeah. So
Kalau kata
nak kena bahagikan
if
sama rata ke?
depends. Kalau dia nak suruh more than one, they will specify the weightage. Either 50-50 or 60-50. But the question never to be that complicated lah. To be honest with you, it will not be that complicated. So usually they will ask you, they will specify only one source. Then what you need to do is just transfer to that particular source. That's it. So basically the same process. Walaupun dia specify katakanlah to notes payable. Our earlier steps will remain the same. You don't increase earlier. So you will still remain the 35,000 constant at first. You just will add the final values nanti. Okay, you don't do anything at first. Maknanya the steps will remain the same. Okay, the only difference only on the final step after you found out your AFN, and then baru you transfer to your notes payable or bond or preferred or even common stocks. Depends on questions. And as I said, they will never give you two sources lah to transfer. Usually they will ask you either one ataupun none, like this question. Like this question dia tak suruh specify kan. So we're going to end with AFN as one line. Okay. So don't worry. They will not ask you to absorb to more than one. Okay, funding. But in real life, it's possible to absorb by many or to multiple sources. Okay, in real life, yes. And it will be slightly complicated lah. You need to know more the concept of why they will segregate into multiple because of the capital structure. So you nak kena belajar pasal capital structure pula nanti. So it's a totally different topic altogether. Okay, so don't worry about that too much. I just want you to understand that this external funding can be absorbed by any of the external sources. That's it. Okay, anything else? Okay, so basically that would be the end sebenarnya. Cuma kita tak sempat nak habiskan last week. Our topic number 3. Okay, it ends with our Proforma statements, especially balance sheets. Okay, and for my case just now, I didn't show you how to prepare the Proforma income statement. Okay, because most of the time, if they ask you to do Proforma income statement, we're gonna do ratios. Okay, but from our case, why we need ratios is basically to find this part, the retained earning. Okay, the only reason why we need to prepare Proforma income statement is to find the retained earning. But as I showed you earlier, we can find this retained earning alternatively by using this formula. So therefore, we're not going to prepare Proforma income statement because the only thing that we want to know is the retained earning. Instead, we're going to use this formula to find the retained earning and transfer this 72,000 into these values. Ini contoh dalam notes lah. So in our case just now, we add retained earning of the difference of these two lah, 37 minus 66,000 tadi berapa? That value lah. Okay, that value is our retained earning. Sorry.
Doctor, sorry to interrupt. Saya nak tanya, like for sales, for this formula kan return earning 0. plus sell
Sales.
one tu kan.
Hmm.
Like saya macam how to know that is a one.
How to know this is
Dia
sales
kan
one?
bagi banyak tahun kan. So
Usually
how
the
to
question will give you one is the existing, the current
Uh-huh.
year. The other one is our forecasted year. It's only 2 years. Okay, current year, which is the current. Boleh tengok soalan ni balik Let me share with you. This year. This is the current year. And they akan ask us to forecast the following year, 2018. Only 2 years. They will give you only 2 years. So the one that they gave us in the question, this is the existing one, the current one. So they ask us to forecast. Remember, this is statement of financial. Proforma financial statement is a forecasted amount yang kita estimate, the amount yang kita forecast lah, kita plan, kita jangka, alright? So that's why I use sales tadi, sales 1 bukan sales 0. So RE 0, remember whatever lah RE ke S ke, we can put numbers here. It's either 0 or 1. Or even 2 kalau I nak. Tapi in this case, you don't worry about 2 lah sebab we only have 2 years. So when I put 0, it means the original ones. All of this information, this is cash 0. This is prepaid expenses 0. This is written in 0. Okay. And if I put 1, it represents the following year. Okay, the following year, which is in this case is 2018. So if you look at this question, dia cakap sales tadi, it is in 2017. The sales are 500,000. So this is our sales 0, our current sales. So if you look at the question is sales 1. Okay, so how to know? We need to calculate lah. That's why I said my very first information that we need to know is to find the percent of sales increment. So there are 2 ways I said kan. One, they give you percentage like this. Or alternatively, they give you 2 years of sales. 2 years of sales. I wrote in the example last time. I kata current sales 500 and then katakanlah forecasted 750. Okay, I tanya what would be the percentage of increment of sales. Okay, so you need to use the formula kan, yang new minus old divide by old. And ada yang tanya kenapa bagi old. Last week ada yang tanya like that. So this is the alternative way to find the percentage. Okay, so somehow, regardless whether they give you direct or they give you 2 years, you need to find the new sales ni. Okay, kalau tadi you hassle untuk carikan the percentage, for this the hassle is just to find the new sales lah. You just need to increase this 500,000 by additional 20%, and that's why we get the 600,000 here tadi. Okay, boleh ke?
boleh doktor.
Alright, good. So now let's move on to topic 4. Topic 4 ni is actually quite new in the sense that they don't have this before. Before ni maknanya a few years ago lah. I don't know why pun kenapa dia orang tak ada. Because this is actually quite important topic. Okay, because like I said before, I teach other universities before. And this topic is generally everywhere except here, right? But we already incorporate this together. And bear with me, my notes ni agak excessive in the sense that ada certain topics yang somehow tak ada dalam our syllabus. So therefore I give you more. Okay, but we're gonna go through partial of it. Okay, the partial of it only. Alright. Let me highlight lah. First, I will go through in brief je why we need to have working capital management. So by the way, when you look the word working capital, okay, this is basically means, if you remember one of the ratio dalam liquidity before, we have net working capital, whereby for net working capital, the formula is current asset minus current liabilities. Okay, but this is net. Okay, so for topic number 4, it's about working capital. So when we say working capital, this is basically referring to current assets. Okay, this is current assets. So therefore, working capital management, it means how to manage our current assets. Okay, and again, if you recall, in our current assets, we have a lot. Okay, we have a lot of current assets. Okay, but generally, when we talk about current assets management or working capital management, we are looking at 4 items. Okay, we have cash. Okay, 1. We have account receivable. We have inventory. And we also have marketable securities. Okay, to name a few lah. Selalu ni kita akan focus on these 4. Right. Here in the notes, I only incorporate cash management, inventory, and also current receivables. So no marketable securities. Okay, sepatutnya ada but I tak masukkan dalam my notes ni. Okay, but when I check the syllabus, okay, these 2 pun tak ada. Right, just to share with you again. Okay, by the way, this Proforma bukan I yang buat. It's not me. One yang prepare this Proforma. Okay, as you can see here, the name pun I nama kat bawah sekali. But anyway. So if we look here in the working capital management, they have the managing, okay. You only have cash conversion cycle, which is the cash management, and then terus estimating the cost of short-term credit, which is the short-term financing, which is the current liability side. Okay, so that's why for this case, what I'm going to do, so I gave the whole set to you. Okay, you have additional lah, so you can learn yourself kalau you nak lah. Okay, but for this semester, okay, I already highlight this issue to the coordinator of the course, and they will increase the content later because like I said, I dah tak ajar people ni for some time. I dah bagi komen for increment tapi dia orang tak buat. So you guys lucky lah, we don't have to learn these 2. Okay, so for today, what we are going to do is basically from 4.1, 4.2, and 4.3, and then we go straight to 4.6. Kalau sempat everything today lah. Okay, so for 1, 2, 3 ni very easy. I don't have issues to finish everything today, but for short-term financing, it may be a while. Okay, so if you downloaded the file, okay, just to let you know that we are not going to go through everything because 4.4 and 4.5 will not be discussed as it is not part of your syllabus. For this sem, for next semester onwards, they're going to increase the content. Okay, because I highlighted benda ni lah. Right. But anyway, when we talk about working capital, it's involved day-to-day decisions regarding to the investment of current assets. Okay, as I said tadi lah. So we have 4, but again, in our case, we're going to focus only on cash. But technically, we have at least 4 different current assets. And we're going to manage these 4 assets. And if the companies facing shortages of these current assets, they need to know how to finance these assets, how to borrow money. So that's why at the end, we're going to learn about the financing part. Okay, how to cover the costs. Okay, how to cover this shortage of current assets by having these current liabilities. Because when we have short-term financing, we are talking about current liabilities. Okay, so based on the firm's need for adequate liquidity, they have to ensure that they have sufficient, especially kalau cash line, on hand to meet all short-term obligations. Okay, because if they don't meet ataupun if they don't manage their liquidity, they might having problems with regards to their risk, return, and also share price. Okay, so all of this will be affected if they have problems with liquidity. Okay, remember liquidity as simple as you don't have enough money to pay your short-term debts. You ada hutang dengan kawan you RM100, okay, but you only have RM50. So that is the problem with liquidity. Okay, short-term basis, not long-term. So automatically will affect other things as well. So when we talk about risk and return trade-off, this is where you need to balance out between liquidity and profitability. I also mentioned before during our financial ratios topic, liquidity ataupun current assets Okay, current assets. Panggil dia considered lah. Consider the least return assets. Okay, items under current assets, cash, for example. Yang paling assume cash lah. How to generate cash? Kalau you put aside a certain amount of money in your vaults, peti besi you you put aside 100,000 in your vaults. Okay, today, 1 year from now, you will remain 100,000. There will be no income whatsoever. Itu kalau cash. Similarly, like your like your marketable securities, for example, your return usually very, very low. So that's why for current assets, okay, meaning associated with liquidity, if you have too excessive of liquidity, which is too much of current assets, you're going to have low returns. Okay, so how to get more returns is by invest it somewhere else. Okay, the opposite of current assets, you have fixed asset, kan? Okay, fixed assets are more profitable. Okay, are more profitable. Okay, but this is the trade-off ataupun this is the dilemma that you have. You nak more on liquidity ke, you nak more on profits. So if you have low level of current assets, you're gonna face financial distress. What does it mean financial distress? Unable to pay debt. Unable to pay debt. Okay, however, if you have high level of current assets, okay, you akan ada low level of profits lah because as I said, current assets are least returns assets. Therefore, you're going to have a lower profits. So if you unable to manage your current assets efficiently or effectively, then you're going to face either of these two lah. So by having the proper working capital management, we are actually trying to balance out. Okay, we want to balance, meaning we don't have to face low level of current assets. At the same time, we're not going to have a high level of current assets. So we are trying to find the balance between the two. All right, so that's the main reason why we need to manage our current assets. Okay, so this is one example, just to give you an idea why, for example, this is from cash point of view. Why, if you don't manage our cash properly, it will affect the business as a whole. For example, we're going to start from this part. But imagine this is our first step. The company delays the payment to the creditors. Imagine you are managing one company, and your company buy goods from your suppliers, and you buy using credit. You don't pay cash, you're just using credit. And somehow you are facing cash shortages. You don't have enough cash to pay your suppliers. So therefore, you're going to delay the payments. Okay, so once you delay your payment, it will affect your credit ratings. Okay, every companies, every individuals will have credit ratings. Credit ratings indicates your credit worthiness, whether you are able to get credit or not in the future. So kalau you delay payments now, okay, so the one yang you dah ada supplies now is okay, but in the future, you're gonna having problems to get more supplies. More raw material too will be problematic in order to secure the raw material lah. So imagine you delay payment, it will affect your credit worthiness, and therefore your supplier will not give you credit anymore. They will not give you goods anymore, and therefore you cannot secure the materials. Okay, because your supplier cannot provide you with the raw material anymore because you don't have cash. Okay, you tak boleh bayar supplier, being able to secure materials, and these materials is important for your productions. Okay, when you don't have raw material, how to produce kan? So therefore, it will affect to the low productions. Now your production is low because of the lack of material. When you produce low, obviously you cannot come out with the finished goods because these finished goods will be available to be sold to the customers. Okay, so maknanya you cannot do sales. Your sales will drop. When your sales drops, okay, sales drop lah, therefore you're going to have a low cash flows, low incoming monies, and therefore results in further cash shortages. Okay, dah lah cash tak cukup, sales pun tak jalan, and lack of incoming money. So if this is cycles keep on repeating from one month to another, or eventually the company will have really severe cash shortages and therefore cannot pay any debt anymore. Okay, kalau dia tak mampu nak bayar any debt anymore, technically they akan face this insolvency issues, and worst case scenario they will face bankruptcy. So that's why by not managing cash sahaja, it will impact from one thing to another. Sampai worst case scenario, they can face bankruptcy. So that's why managing working capital, including cash, is really, really important. Okay, so the challenge is to decide lah, to mix between current assets and also the investment in higher level of profitability. Okay, because obviously will involve with a higher risk. So therefore, as a financial manager, if somehow in future you might end up in this position, you need to remember you just will take additional risks if you forecast that you can get additional returns, okay, or else you don't take risks. Right. So yang lain ni, I think I'm gonna leave it to you to read on your own. Okay, what are the factors that can affect the working capital level, because some factors ataupun some companies may have a different approach to managing their working capital as compared to the rest. So one of it is the types of business. Some businesses might have to have a higher working capital requirements, okay, as compared to other types of industries. Okay, industries like manufacturing or retail usually have a higher working capital because they need to they involved with the more on retail businesses as compared to maybe financial services companies, for example. Okay, so nanti you baca ni. This one pun nanti I leave it to you. I'm gonna go straight for today. Okay, with the cash management. This one. Okay, cash management. Okay, and somehow I can explain again the one that we skipped just now. Okay, so cash management. So under cash management, again, remember why we do working capital management is to balance between too high level of liquidity dengan to manage the profitability of the company. So here, cash refers to the currency or the coin that the company has, either in petty cash, okay, ataupun dalam vault, for example, okay, or in the banks, okay. Cuma dalam bank, usually they refers to checking accounts, okay, ataupun sometimes savings account. Okay, checking account, which is in Malaysia kita tak bagi checking. In Malaysia, usually we refer to current accounts. This current account usually will not pay you any dividend ataupun any interest. Savings will pay you very minimal, less than 1%. Less than 1% return. So that's why it's almost zero returns lah. Savings or even current assets. Current accounts. Okay. So cash often called as a liquid assets ataupun non-earning assets. Okay, as the nature of the asset, which is you will not earn anything if you keep in this form. If you want to earn, we need to invest. Then baru jadi earning assets. But as a cash punya form, it is a non-earning asset. Okay, and these assets really important, even though it's a non-earning assets, but still important because of these reasons. Okay, because obviously you need to pay salaries to your workers, to pay your suppliers, okay, for raw materials. If you have loans, to pay loans, you need to have cash and any other matters lah. So therefore, here I simplify the three major motives why company needs to have cash. Okay, three reasons. Okay, motives ataupun reasons why companies needs to maintain cash. We cannot totally maintain zero cash. We need to have some form of cash, some form of liquidity in order to have these three motives. Number one, transaction motives. Okay, transaction motive basically means for day-to-day operations. Okay, as a company, you need to maintain a certain level of cash for the operations or for their day-to-day usage. Okay, what kind of usage that they need? Something like this lah. To pay salaries, to pay your suppliers, if you have loans, to pay the loans, to pay your utility bills, rental, okay, anything got to do with the operations of the company. Okay, so that's the main reasons why company needs to maintain cash for transaction motives. Because if they don't have cash, how to manage their operations? Okay, takkan always nak berhutang, takkan always nak on credit. So therefore, they need to have this sort of cash for transaction motives. Second, for precautionary. Precautionary means for emergency. Okay, similar like us individual lah. Sometimes we keep a certain amount of money in our savings account ke somewhere else lah. Just in case for rainy days in the future. So if you have problems in the future for companies, maybe in the form of tiba-tiba machines broke down. Okay, you have machines to produce your goods, but the machines is out of warranty, but needs to be serviced or needs to be repaired. Okay, if you don't have cash, how to repair the machines? Because this is emergency, because this is part of your operations, but it is something that you didn't plan. You tak plan untuk benda tu rosak kan. So therefore, this is emergency case, and if you don't have cash, you cannot send it for repairs, and if you cannot repair the machines, you cannot produce goods. Therefore, it will affect the productions of the company. So that's why you need to keep aside a certain amount of cash as a precautionary, as an emergency cases. Okay, and the third reason why we need to keep cash is for speculative motives. So speculative means for profit-making situation. Okay, so the reason is actually quite similar macam precautionary, because precautionary is something that we didn't plan, we will not know until it happens. Okay, similar like speculative. Okay, speculative means, ataupun example I can give you, for example, if you have cash, okay, let's say that month, your supplier give extra discounts. Okay, extra discount if you pay cash. Instead of you buy your goods by credit, you pay cash, okay, to your suppliers. So if you have cash, you can take this opportunity to buy at a cheaper discount ataupun cheaper price from your suppliers. Okay, or else you're gonna start with the normal price. And when we talk about normal price, then your profit margin akan remain the same lah. But if you can buy the stocks ataupun the raw material at a cheaper cost, it will increase your profit margin, and therefore you're gonna have a bigger profit margin. So that's the speculative motives. Okay, so all of three, you can read again here, and I explain one by one tadi. So for transaction motives, cash required due to the ordinary cost of doing business, which is from day-to-day punya operations, to purchase raw material, to payment of salaries and wages to your staff, to pay bills, utilities, rental, and so on. Precautionary as a buffer, okay, to meet unforeseen events as emergency, for example, which sometimes require you to make payment using cash. Okay, and this may arise due to risk juga lah, uncertainty. We never know what will happen in the future. And for speculative, to take advantage of any profit-making situation lah, for example, like unexpected bargain. Okay, discount, for example, if they give you, ataupun if you pay by cash. Okay, and you anticipate the price even to go up in the future, then you can buy at cheaper price. So you akan dapat lagi save a lot there. So this is speculative motive. Okay, but similarly, as before, we are not keen on too excessive of cash. Okay, bila kita tengok, oh banyak reason why we need to keep cash, then keep a lot lah. No, we cannot keep that much as well. Because as I said, cash is not earning. So therefore, if you have too many cash, then you're gonna have less profits. Okay, less profits. So this is your dilemma, as I said, to balance between whether to have high level of liquidity ataupun low level of liquidity. So therefore, as a financial manager, you need to strike an acceptable balance between the two lah. Okay, whether too much ataupun too little. So we don't have. Cuma when we set, it's easier to set lah. Okay, kita balancekan je lah. So how much is actually the balance? So that's why under cash management, we're gonna have a tool. Okay, tool dia dipanggil cash conversion cycle. By having this cash conversion cycle, ataupun sometimes we just in short kita panggil dia cash cycle. Okay, by having this, we're going to identify how much actually will be the minimum amount. Okay, by using this method, we are going to find what will be the minimum amount that the company needs to maintain. So therefore, we have a benchmark, the value. So as a company, we can set around that figure. It shouldn't be less than that, okay, but we may keep a slightly above that values in order to maintain a balanced amount of liquidity. Okay, so that's what we're going to discuss in the cash management techniques, right? So how to do that? Okay, I'm going to skip all of this. So the goal, like I said, to maintain the minimum cash balance. At the same time, we know this amount of cash that we keep will be sufficient. Okay, will be sufficient to maintain ataupun to cover the liquidity issues. So meaning whatever amount or borrowings that we have in short-term basis, we're gonna have the right amount to cover that. Okay, so the method, like I said, is called, okay, I skip this first, I go straight to yang ni dulu. Okay, the method is known as cash cycle or the cash conversion cycle. Okay, so under the cash cycle, it defines as the overall time ataupun overall period between the time cash is paid out to suppliers until the payment received from customers. So that's the whole stretch of cash cycle. From the day you pay your suppliers until the day you receive back your payment. So that's the stretch, the number of days taken. So obviously, as a business, we want our cash cycle to be as short as possible. Meaning, bayar supplier hari ni, then we want to either to produce ataupun to sell our goods to our customers, and then we receive back from our customers the payment. That is the total cash cycle. So therefore, in short, the cash cycle can be defined ataupun can be found using this simple formula. Okay, cash cycle ataupun CC can be found using these three items. First is AAI. So what is AAI? AAI stands for average age of inventory. Okay, average age of inventory. So what does it mean by average age of inventory? Yeah, I can reverse balik. Average age of inventory ni okay, refers to, okay, so this is the definition, average age of inventory. It refers to the number of days taken, okay, the average number of days taken from the day you purchase raw material, okay, from the day you purchase raw material, okay, until the day you sell the goods. Okay, jangan tengok yang atas ni sebab ni operating cycle, kita tengok yang bawah ni. Okay, the average days taken from the day you purchase raw material until the day you sell the goods. Okay, so that's AAI. Okay, tengok kat sini AAI. The average time taken to convert material, meaning from the day you purchase raw material, you produce it as a finished goods, and then you sell it to the customers. So the total number of days taken will be your AAI. Okay, that will be your AAI, average age of inventories. Okay. Go back to this part. So that's AAI. I repeat, AAI stands for Average Age of Inventories. And what does it mean by AAI? It defines as the average number of days taken from the day you purchase raw material until the day you sell your goods. Okay, sell too, it can be on cash or on credit basis. Doesn't matter as long as you say as long as you sell the goods. So that's number one, AAI. Okay, so how to find the AAI? Okay, bear with me. I'm gonna go back to AAI. So we have this formula to find AAI. Okay, so how to find the AAI is based on the inventory values. We divide with cost of goods sold and we multiply with 360. Okay, so if you recall, if you multiply with 360, we're gonna get AI in number of days. Right, so AI will be in days. How many days will be the average age of inventory? Okay, so this is one way. Okay, this is one way how to find the AI. Alternatively, how to find AI is to calculate based on two dates. Okay, so this is the alternative way to find AAI. Right, so to find the alternative way is by calculating the number of days taken based on the definition. Remember definition dia? I ulang lagi. The definition or average age of inventory is the number of days taken from the day they purchase raw material, and then they convert into finished goods, and then sell the finished goods. So meaning from the day they purchase raw material until the day they sell. So, okay, to make it easier, what I'm gonna do is to use this example. Okay, look at question number 1 here. Question number 1. All right, so this company is planning to purchase raw material on the 5th. So dia nak beli on the 5th of April 2017. So this is the date of purchase raw material. Remember, the definition of EAI is based on the purchase of raw material until the day they sell their goods. So the goods will be sold on the 4th of July 2017. So technically, we can find the EAI by looking at these two dates. By looking at these two dates. Okay, we have 5th of April 2017 and we have 4th of July 2017. So AAI will be the difference of these two. Okay, why? Because this fit in the definition of AAI. Okay, so meaning, I repeat balik how to find AAI is either by using this formula, but again, if you want to use this formula, we need to know these two values. So sometimes the question may not give you these two values. So instead, they're going to give you two dates. They're going to give you two dates. So what we need to do, if they give you two dates, we need to calculate it manually. Sorry. So we need to find it manually. So how to find it manually? So this is the power of financial calculators. If you have financial calculators. Okay, so for financial calculators, okay, we have days function kat dalam financial calculators ni. So what I need to do, just put in my calculators two dates. The first date here is April the 5th, 2017. And we also have July the 4th, 2017. So based on my calculation here, based on my calculators, when I insert these two dates, I have the EAI of 90 days. Okay, based on these two dates. Right, so I can find AI simply by calculating the difference between these 2 days. And I get this AI of 90 days. Tak payah formula, just take from that. But this is based on financial calculators. Okay, but majority of you or maybe all of you tak ada financial calculators. So how to get this 90 days? So you have to calculate it manually. Okay, you have to calculate it manually. So I set up a simple calculations. Okay, to make sure you get the same numbers. Okay, to get the same numbers. So what you need to do, okay, we know April, May, June, and July. Okay, because the transaction happened from April until July. So we list down all 4 months. And we're going to find the number of days according to the month. For example, for April, okay, it starts from 5th, okay? 5th of April. So we know in April we have 30 days. Remember, this is 2017. Okay, and don't worry, it's not February anyway. So not worry about the year. So just focus on the month. So it's April. April we have 30 days. So 30 minus 5. So we have 25 days for April. Okay, 25 days for April. For May, a total, the whole month of May, we have 31. For June, we're going to have 30. And for July, it will end on the 4th, right? So it will end on the 4th. So when you add all of this, it's supposed to be 90 days. Okay, so this is how you find your AEI. But again, you need to read the information about the dates lah. So what kind of information? I recap a little. The definition of AEI is from the day you purchase raw material until the day you sell your goods. So in this question, they give you just 2 dates, right? So what you need to do is to find the difference of days between the 2 dates. And we found here our AEI is 90 days. Okay, 90 days. So this is our AEI, 90 days. All right, so that's number 1. Okay, number 1 of our cash cycles, our first part, AEI. Okay, clear eh? Tak clear, just let me know eh. Tak nanti I go straight to the second one now, which is ACP. ACP stands for Average Collection Period. Okay, and again, ACP sebenarnya you've learned this in financial ratios topic. We've learned this in topic number 2. Topic number 2 before. ACP. Again, we can define ACP. Okay, ACP is the average number of days taken from the day your customer purchase your goods until the day they make payments. Okay, I recap. ACP stands for average number of days taken from the day you sell your goods until the day your customer make payments. Okay, so that's why it says here the average number of days customers take to pay. So similar like AEI, okay, you can find the ACP by calculating based on 2 dates if they give you 2 dates, or you can use this formula for ACP, which we've learned this before. Okay, it's based on account receivables. Okay, but for cash cycle, we're going to focus on credit sales. Okay, kalau you ingat dalam ratio before this, we use ACP based on receivables divide by sales, multiply with 360. Okay, Kalau tak sure, you go back to videos. We've discussed this before. Okay, but for cash cycle, we are focusing on the credit sales. So look at the questions, whether they give you a credit portions, or if not, then we can use the total sales amount. Okay. So this is the second way to find ACP. For ACP, we have a third method. So meaning first, calculate manually. Second, using ratio. Okay, the third method for ACP, we can use ACP based on by using credit terms. Okay, credit terms. That's why we don't learn about account receivable management. But anyway, credit terms is terms that being used ataupun given to the customers of a business. So you give credit to customers, and obviously bila kita bagi credit, we need to give them terms and conditions. How long you can delay the payments. We need to specify to them. Kalau tak nanti sampai bila-bila dia tak bayar kan. So this is example of a credit term. Okay, they specify 210 net 30, for example. So this is one example of a credit terms. So what does it mean? It means if you pay within 10 days, you're gonna get 2% discounts. Okay, you're gonna get 2% discounts. Or if you don't want to take the discount, you have to pay in full within 30 days. So you have 2 days kat sini lah, 10 days and 30 days. If you want to get a discount of 2%, you pay early within 10 days. But if you don't want to get the discount, you can delay the payment up until 30th day, hari yang ke-30. Okay, so what these credit terms got to do with ACP? Okay, so again, bear with me. We have to bring forward and backwards my notes kat sini. Okay, because from there nanti baru you can make sense why we have these assumptions. Okay, collections. As a business owners, kalau you own a business, right? If you own a business and you give credit to customer, do you want your customer to pay early or to pay late? You are the business ni, you bagi credit to your customer. Normally, will you expect your customer to pay early or to pay late? Okay, obviously, as a natural punya instinct, obviously we want to expect our customers to pay early. Okay? So, we have 10 days here and 30 days here. And why we give this discount? Basically to encourage our customer to pay early, right? So therefore, when we talk about average collection period, okay, so we're gonna assume sekarang ni, we're gonna make an assumptions that our customers is going to pay early. So therefore, between 10 and 30th day here, we're gonna assume the customer gonna pay within 10 days. Okay, within 10 days. So therefore, if the question gave us credit terms like this, we don't have to calculate. We just gonna assume the ACP here would be 10 days. Okay, because we encourage our customer to pay early by giving out discounts. Okay, so that's the assumption. So therefore, look at the question and find what kind of information given in the question. Either they give you 2 dates, ini dia akan bagi 2 dates, or they give you this other receivable, other sales, then we know we need to use the ratio. Or they might give you credit terms, and therefore we're gonna assume the earliest will be the ACP. Okay, so for ACP, you need to be careful sikit lah. So for example, if you go back to the question just now, based on this, question number 1, we can see one credit terms kat sini. Okay, but we cannot assume that's ours untuk ACP so far. But on top of that, they give us also account receivables. So meaning we have account receivables. And we also have sales kat sini, which is 60% of it on credit. Okay, so now we need to define which information to be used for our ACP. Okay, remember ACP is from the day your customer purchase your goods until the day they make payment to us. So basically ACP stands for number of days taken for your customers to make payments. And if you look at these credit terms, okay, this credit term is payment of this company for their purchase of raw material. Okay, this is not from your customer, not from their customer. This is from this company to the supplier. So therefore, this is not ACP. This credit term is not for ACP. So what is ACP then? ACP, if you can see from this formula, we need receivables, we need credit sales. And this information can be found here. We have receivable of 15,000 and we have sales and also the credit portion of it here. So in conclusion, for this question, the ACP can be found using formula. Okay, the receivables of the company is 15,000. Okay, the 350 ni bukan receivable 350 ni the initial outlay, which I will explain later. But the account receivable is 15,000. So receivable is 15,000. And now we need to find the credit portion of the sales. We know the total value of sales is 120,000. Okay, but 60% will be on credit. So we need to multiply with 60%. Okay, and we multiply this by 360. Okay, so 15,000 divided by 110,000. 60% times 360. So here we have is 75 days of ACP. So the average collection period is 75 days, based on the information given in the questions. Okay, so that's ACP. So look in the question, find the relevant information, and decide which method to use. Okay, so this requires understanding, and yeah, understanding ni sebenarnya. Need to understand which information given and which method to be used according to the information given in the question. Because there's no one thing ataupun there's no one way to find the ACP. Right? So that's the second part. So I skip earlier kalau you perasan the operating cycle. So the operating cycle is actually consists of these two elements. But don't worry about operating cycle because the question will never ask you about operating cycle. Okay, because we are focusing on cash cycle. Because cash cycle still will have this AAI and ACP, which is these two is actually is your operating cycle, but don't worry about this. Just focus on individual items, AAI and ACP. But we have the final item, which is the APP. APP stands for average payment period. Okay, and by definition, APP stands for the average number of days taken by the company to make payments. Okay, to make payments of the raw material they purchased earlier. Okay, so how to find APP? Again, it's quite similar like ACP. We can find the APP by calculating the number of days taken by manually calculate the two dates if they give you two dates. Or we can use this formula. Okay, so the formula is payables divided by cost of goods sold times 360. Or the third method is by using credit terms. Okay, but the difference between collection and payables, okay, the rules ataupun the assumption that we use for collections, we're going to pay early. Sorry, we're going to collect early. Okay, we are going to collect our payments as early as possible. Okay, but for payables, Okay, we're gonna assume differently. Let's say we have 3% discount if you pay within 10 days, or you pay full within 15 days, for example. Right? If ACP, we're gonna assume it's 10 days, okay, as before, like this. But for payables, okay, in order to get the best cash cycle, we're gonna delay. Okay, the payables, we're gonna delay as late as possible. So between these two dates, okay, 10 and 15, obviously we're gonna use this part as our payables. So APP would be 15 days in this case lah. Right, so we're gonna use the one ataupun the as late as possible. As late as possible. Right, so that's payables. So therefore, if we look again at the question, but this question doesn't provide us with any discounts. They just give us the credit term as net 60. 60, yeah. So therefore, the payment ataupun the APP be 60 days. As simple as that. Don't have to calculate one. Okay, so the APP would be 60 days. So now we have all three items. The AAI, 90 days. The ACP, 75 days. And APP, 60 days. So if you recall, balik formula dia is AAI plus ACP and minus APP. So therefore, the AAI is 90 days. The ACP is 75 days. And minus, don't forget minus, APP is 60 days. So 90 plus 75 and minus 60. So we have here 105 days. So that's our cash cycle. So by definition of cash cycle, if you bear with me a second. Okay. Cash cycle is the overall period between the time cash is paid out to your supplier until the day you receive back your payment from your customer. Okay, by looking at the three items, AI plus ACP minus APP, the company just now requires 105 days of cash cycle. It's quite long. It's quite long. But again, we cannot compare lah. It depends on the company. Ataupun depends on the industry of the company. Anyway, so that's our first part, the cash cycle, which consists of three items. Okay, so once you have the cash cycle, okay, we're going to move on. Okay, this is the first part. We're going to move on to the second formula, which is the cash turnover. But before we go to the cash turnover, this is some strategies that can be used in order to get the best of our cash management. Remember, we have three items, AI, ACP, and APP. So nanti you baca balik kat sini. But in short, what I want to say, the best strategies would be, for AI point of view, we're going to get the fastest AAI as possible. Remember, the definition of AAI means from the day you purchase raw material until the day you do your sales, when you sell your goods. So therefore, obviously, you want it to be as fast as possible, as quickly as possible. So you want your AIs to be as short as possible. Okay. For ACP, this is collection from your customer. Again, when we talk about collection, we want it to be as fast as possible. So therefore, for ACP, our strategy to collect our collections from customers as soon as possible, ataupun as short as possible. And for APP, the strategy would be to delay the payment as late as possible. So therefore, our APP to be as longer as possible. So if we apply this three approach, we're going to get the best cash cycle. So that's why, based on credit terms just now, our assumption is based on this strategy. Okay, collection as soon as possible. So that's why we take the shorter number of days. And for the payables, ataupun payments, we're going to use the latest as possible. So therefore, we're going to use the longer number of days for payables. Okay, based on these strategies. Okay, so now the second parts of our cash conversion cycle. So once you have the cash conversion cycle, the rest is quite straightforward. Next, we're going to find the cash turnover. Okay, so cash turnover means in a year, how many times will be the cash will be turned to you, ataupun turn back to you. So meaning how long it takes ataupun how many times in a year your cash yang you bayar to your supplier tu will go back to you as a form of payments of your customers. So the formula for cash turnover would be 360. So this amount will be fixed, 360. We divide with the cash cycle from our first step. From here. Okay. As a reminder, if you see this pattern, meaning if you get this wrong, any of AI, ACP, or APP wrong, end up you get a wrong cash cycle. If you get a wrong cash cycle, you're going to use it here, a wrong cash cycle here. So if you use a wrong cash cycle here, it'll give you a wrong CTO. Okay, so unfortunately, okay, if that's the case, you might get a 0 marks here lah kalau you use a wrong cash cycle. So therefore, you have to make sure this cash cycle is spot on, correct at the first step. Okay, find AI correctly, ACP and APP. Okay, or else if you have this wrong, so your second and even the third step later on, you will be wrong. Okay, because the formula is straightforward. Wrong information insert here, automatically your result will be wrong altogether. Okay, so simply take 360 divided by the cash cycle. So if we go back to the question, our exercise just now, the CTO, I put the formula first, is 360 divided by CC, cash cycle. Okay, we know our cash cycle was 105. So we take 360 divided by 105. We have here 3.43 times. So the value is in times. Tadi in days, here is in times. 3.43 times. Okay, 3.43 times. So that's the cash turnover. So meaning in a year, the company will turn their cash 3.43 times. Okay, slightly above 3 times. So about every 4 months once. Yeah, every 4 months once. Okay, so again, the higher number of cash turnover is actually the better for the company in terms of their turnovers. But anyway, that's our number 2 step. Cash turnover. So once you have the cash turnover in times just now, we're going to calculate the final information. So this is actually the one that we want to find at the first place. What will be the minimum operating cash required? Because the reason why we have cash conversion cycle method is to find the minimum amount of cash that they need to have. Okay, anything less than that will be insufficient, therefore they will facing liquidity problems. Okay, so this is the minimum. Okay, minimum. So this amount represents the minimum operating cash, and this minimum amount will avoid any cash shortages. And at the same time, you know lah, you don't have to have too much cash. Kalau too excessive from the minimum, we know it's inefficient because the company will not require that much amount of cash. So to find MOC, minimum operating cash, we need to know the outlays. Okay, annual cash outlays. This is cash requirement of the company, and we need to divide with the cash turnover. Cash turnover is based on this. And again, that's why I said if you use wrong cash cycle, you get a wrong CTO. And if you have a wrong CTO, you use it here, then you're going to get a wrong MOC. Okay, so again, I recap. You need to get this cash cycle correct in order to get a full mark from CC. CTO, and MOC. Okay, so once you have this, then we can find the MOC. So MOC equals to cash outlays divided by CTO. And the cash outlays will be given in the question. For example, like this one, the outlay of the company is 350,000. So therefore, you take 350,000, divide with the CTO of 3.43. So this I use the whole number. I have of 102,083 ringgit and 33 cents. Okay, so this is the values of cash that this company needs to maintain at all times in order to make sure that they have sufficient cash throughout the year. Or else they're gonna have a cash shortages because they know they require slightly longer times to generate back the cash. Okay, so that's how we calculate ataupun how we manage ataupun how we use the cash management techniques in order to calculate the minimum operating cash. Okay, let's try this one pula. Okay, I give you 5 minutes. Okay, can you try this? 5 minutes, 10 minutes lah. 10 minutes to answer question number 2. Okay, just to let you know, for this question, there's a slight difference in the interpretation of the number of days, that we use. Okay, as compared to the first one just now. When we calculate the 2 dates difference, we use the actual number of days. The actual number of days, meaning when we set the actual number of days, the actual number of days means the month of April, for example, is 30, the month of May, 31, and so on. Okay, but for second question, okay, they give us assumption. Okay, they ask us to assume 360 days in a year. So what's gonna happen will be when we set 360 days in a year, meaning in a month, divide by 12, you're gonna have a 30 days only per month. So what's the implication of this is the calculations of AAI. Okay, so we know the purchase raw material on the 5th of Jan, and the good will be sold on the 15th of Feb 2018. So we have Jan and February only, 2 months. So January, okay, since our assumption is 30 days per month based on this, so it will be 30 minus 5, which is 25 days. And Feb, we have 15 days. Therefore, as a total, it will be 40 days. Okay, kalau you're going to use full, you're going to put 31 kan? And then you dapat 36, and then you akan dapat 41 days. Okay, a slight difference by 1 day. Okay, and my advice is to read the question. Okay, read the question, whether they ask you to assume 360 or not. Okay, don't get confused dengan CTO. CTO, we always use 360. But this is for AAI. Okay, so AI, kalau they mention about assumption of 360 in a day, 360 days in a year, we're going to use 30 days a month. Therefore, it will affect our AI. Unlike the first one, there's no assumption. We're going to use the full number of days. Okay, so be careful about that one. Ada tak contoh lain? Okay lah. But anyway, so that's how we get AI of 40 days. So cash cycle 40 days plus the ACP. For this question, the estimated sales of goods are 60,000, and then the other account receivable 20, and outlay 600,000. And again, as I said, since the question doesn't specify to us which parts are credit, because they just mentioned the sales are 60,000. So what we need to do is just take ACP of receivable 20,000 divide by sales 60,000. 20 sepanjang kan. Times 360. So this is your ACP, 120 days. Okay, 20,000 is the receivables, 60,000 is the sales, but without the credit portion, so we're going to assume 60,000 all credits. Okay, times 360, then we get 120 days. So we add 120 here, and then the payments, the payables. And we purchase on the 5th with the payment on credit based on this term. Okay, remember, this is the terms for us. For this person, payment ataupun payables to the supplier. So remember, in payables, we're going to pay as late as possible. So we're going to pay on the 40th day. So you just minus 40, yeah? So not 40 each other. So we have a cash cycle of 120 days. Okay, 120 days is our cash cycle. AAI 40 days based on the two dates. The ACP 120 days based on the formula, the ratio. And the 40 days is based on the credit terms, the payable. So this person are advised to pay as late as possible, 40 days. So we have a total cash cycle of 120. So 40 plus 120 minus 40. So 40 minus 40, 0. So 120 lah. So for cash turnover, it's 360 divided by 120. 3 times. Okay, times. And the MOC is based on outlay. Outlay is 600,000. So 600,000 divided by 3. So you have 1,000. Okay, 600,000 divided by 3. Okay, 200,000. So basically that's the answer for all three. Okay, but if you want to comment, ataupun if you are asked to comment whether they are current practice, because currently the firm is holding 80,000 cash. So if they ask you to comment whether this current practice is sufficient or not, so you need to compare this against the recommended minimum operating cash cycle. So the minimum operating cash is 200,000. Okay, but the company is currently just holding 80,000. So meaning it's short. It's not enough. It's not sufficient to cover the minimum operating cash burn. So therefore, if they ask you to comment based on the current practice, you need to know what is the current amount, and then compare against the MOC, the minimum operating cash, and then you comment if it's sufficient or not. So in this case, it is insufficient. So therefore, you can comment the current practice of the firms holding 80,000 cash on average is not sufficient because based on MOC, the minimum ataupun the recommended minimum operating cash would be 200,000 ringgit. So meaning this company might face some liquidity problem. Okay, so if they ask you to comment. Okay, but if they ask lah. Dalam notes ni ada tanya, if I'm not mistaken. So for these notes, they ask you, is the current cash holding sufficient or not? Okay, you can try, take a look at this. Tak ada jawapan, yeah, and then you can try and identify whether it's sufficient or not. Okay, so with that, I think I'm gonna stop here. Like I said, inventory dengan silver, I will skip. I will not go through this because it's not part of your syllabus. So for next week, we are going to continue with the short-term financing. So why we need short-term financing is because we have shortage of working capital. It can be shortage of cash, it can be because of inventory or even account receivables. So whenever we're facing shortages of working capital, the obvious solution is to borrow. Okay, we have to borrow. So here in short-term financing, we're going to discuss what are the options that we have when we want to borrow in short-term basis. And the most important part is what will be the costs. Okay, so in short-term financing, we're going to go into details, the types of upon the options that we have. Then we're going to calculate how to calculate the cost for each options that we have. Okay, so this kita akan discuss in our next meeting. Masuk kat sini lah. This one, the short-term financing, short-term credit sources. Okay, so any questions so far? Okay, I might give you one quiz lah, kot, but I will give a different question later. Okay, regarding this topic maybe. Okay, I will post dalam my guru. Please check dalam my guru for the question. And please revert dalam my guru lah the answers. So today is Monday. So I'll give you until Thursday. Okay, until Thursday. Nanti check dalam my guru the question. Please answer in my guru as well. And I'll give you until Thursday for the quiz. Okay, and it will be based on this cash management question.
Doctor, are you going to upload the test today?
To the what?
The quiz.
Yeah, I will upload the quiz later. The quiz haven't been uploaded yet. Nanti I upload dalam my guru by today. Just afterwards I will upload, and I'll give you until Thursday to answer it and reply dalam my guru.
Okay, Doctor.
All right. So with that, again, thank you very much. As always, I will share the video once it's available. And inshallah, see you guys next week to continue with the short-term financing. All right. Thank you.
Thank you, Doctor.
All right. Welcome.
Good.
Thank you, Doctor.
Right.